The biggest con I would say with LLCs is putting the cart before the horse. I cannot tell you how many people where they literally let setting up an LLC get in the way. If that's what's holding you back from investing, you really need to do the work of educating yourself on what a good entity structure sequence looks like, right? Don't let this be the thing that holds you up from buying your next rental property. Hey, welcome back everyone to this show. Today we're going to talk about LLCs, and hopefully this is the podcast to end all conversation about LLCs, okay? And after working with over 500 real estate investors over the last 2-3 years, as well as doing LLCs on my own, I kind of developed the LLC playbook, okay? It's not going to be an all-inclusive playbook for your exact situation, but it's going to tell you exactly what you should be thinking about if you want to set up an LLC. Now, first I'll say this, first and foremost, an LLC does not save you money on taxes. Let me repeat that one more time. An LLC does not save you money on taxes. All an LLC is a limited liability company. It separates your liability from the business and the business from you, okay? It does not help you save money on taxes. So another common question I get is, oh, well, now that I have an LLC, shouldn't everything be deductible? Shouldn't everything be written off? And the answer is, it depends, right? It depends on if that expense is a reasonable and necessary expense in your business, but whether or not you had an LLC or not, you're gonna be able to deduct that. Now, let's talk a little bit about some pre-forward, if you will, right? So, do you need an LLC for every property? The answer is no. I'm gonna give you guys later on in the episode my general rule of thumb that I use in determining if you need an LLC or not. But let's talk about some of the pros and cons. So the pros to an LLC. The first thing would be that an LLC is going to offer you better asset protection than if you had everything in your personal name. Okay, think about it. If you had 5 rentals in your personal name and someone slips and falls on one of them, that person can go after all the properties in your personal name because there's no separation of the business from you, right? So having your properties in LLCs is going to offer better asset protection. Another benefit would be you can maintain separate books and records inside of your LLC, right? So an LLC is going to separate from each property. You have one property in each LLC, and you keep separate books and records for each LLC. Now that could be also a con, which we're going to get into, is each LLC needs to have its own bank account, right? So each LLC needs to have its own bank account. Another benefit is flexible tax status. So for example, an LLC, just having an LLC, you haven't determined a tax status. But what an LLC allows you to do is you can elect which tax status you want to be. Whether you want to be treated as a disregarded entity, a partnership, an S corporation, a C corporation. Now remember, we don't use corporations when we're dealing with rentals, but an LLC allows you that flexibility to be taxed at whatever, however you want to be taxed. No additional tax returns if you set it up the right way. And here's the number one mistake that I see investors make, especially husband and wife, especially married filing joint couples, making the mistake of setting up multi-member LLCs. Okay, if you have a spouse, the general inclination is to add both spouses to the LLC. But what that does in most states is it creates an additional business tax return. And you do not want to do this. You don't want to be creating additional business tax returns for yourself. I've seen it where couples have 4 rental properties, and each property is in its own separate LLC. You don't want to do that because it's going to create an additional tax filings, right? But if you set your entity structure up the right way, you can still have 0 to few tax return filing obligations based on how your LLC is set up. The other benefit of having an LLC, and this is especially if you have partners, is the ability to form an operating agreement. So when you set up your LLC, you're going to set up the bylaws and the operations of the company, and with that comes the operating agreement. And it's going to tell you exactly what you're able to do, what you're not able to do, who contributes what money and how much, who's responsible for the damages, liabilities, the revenue, the expenses of that company, and that's all going to be in the operating agreement. Now moving over to some cons of an LLC. The biggest con I would say with LLCs is putting the cart before the horse, okay? I cannot tell you how many people where they literally let setting up an LLC get in the way. All right, they have so many questions about, do I set up the LLC now? In what state do I set it up? Do I have a holding company? All these different types of questions. If that's what's holding you back from investing, you really need to do the work of educating yourself on what a good entity structure entity structure sequence looks like, right? Don't let this be the thing that holds you up from buying your next rental property. You want to understand this stuff, whether it's from my podcast or whether you find it out online. You want to understand a good entity structure holding setup, right? Putting the cart before the horse, or people get fear of getting it wrong. Now let me tell you something. I would much rather you put the time and effort in to figuring out what a good asset protection structure looks like on your end before you go buying up a bunch of property. Why? Well, that's where we see some of the most mistakes and some of the most penalties and the filings. All those things add up when you don't do it right the first time. And so I would encourage and I would challenge you to do it right the first time. One of the other cons is the fees per state. So when you set up an LLC, you have to pay fees to each state, and some states might have an additional business tax return. This is just another cost of doing business. And so if you're not somebody that likes to pay a lot of fees and money, don't set up LLCs. But there is going to be an additional cost to setting up LLCs, especially in certain states. Not to pick on you, but California, Tennessee, New York, Jersey, those states are going to have additional LLC fees and return requirements. Lending restrictions is a big one. Okay, be very cautious and be very careful understanding the lending limitations between your personal name and your business, your LLC. It's always going to be quickest, easiest, cheapest to get a loan in your personal name, but then that creates a liability risk, right? Versus it's always going to be best from an entity structure perspective to hold that property in an LLC, but then you're going to get less favorable terms and rates, and there could be prepayment penalties, etc. But just understand the cons of having an LLC. And then we talked about this, but if setting up the LLC the wrong way, it's going to create additional tax returns, right? If you set up a bunch of S corps or partnership returns, or you set up your LLC the wrong way because you did LegalZoom or something online and you set it up the wrong way, it can inadvertently create additional tax returns that require fees, could lead to late penalties, and that's something you don't want to do. Now, I'm going to give you my back of the napkin math to know if you need an LLC or not, and if you should do it per property, okay? Now, I am not a lawyer. I'm definitely not your lawyer. I'm not even a lawyer, all right? But what I've done is I know a thing or two from working with a person or two on this type of stuff, and my general rule of thumb is I either use a per equity, per property calculation, or I use a percentage of your total net worth. Okay, so here it is. So if you come to me and you say, Ryan, I got 7 properties, do I need to put each property in an LLC? My general rule of thumb, which might be different than yours, which could be different from somebody else's, is as soon as you get $250K of equity in a single property, and that's equity, okay? Equity as in, if you were to sell it today, here's how much you would walk away with, that type of equity. As soon as you get more than $250K of equity in a property, you want to put that property in its own LLC, okay? It's $250K of equity. Now this could change. Your threshold might be 100K or 50K or 150K, 200K, doesn't matter, but you got to come up with that threshold. And that threshold is normally, especially if you guys are sub 5 properties, let's say, that's going to be a percentage of your net worth, right? How much of my net worth am I willing to just have floating out there and lose potentially if I ever get sued? So $250,000 of equity per property, or 20% of your net worth. If you ever have 20% of your net worth tied up in one property, property needs to be in an LLC, no questions asked, okay? 250K of equity per property, or 20% of your net worth, okay? So I hope that helps, gives you a little bit of guideline and framework. So let's say I had 5 properties, but none of them have over 250K of equity. Well, what am I doing? Well, how much of those 5 properties relative to my overall net worth, then maybe it's worth putting them in an LLC. And hopefully you can follow that and understand it. Now, a lot of times people want to know, hey, what are the steps? So let me give it to you real easy and clear. First step is going to go to Secretary of State website for the state that you're going to do business in. Again, if you're owning rental properties, the LLC has got to be in the state where the rental property is located at, okay? So if I'm buying a Florida, let's say I live in Illinois, I'm buying a Florida property, I'm going to go on the Florida Secretary of State website, form an LLC in Florida, step number 1. Step number 2, now that I formed that LLC, what I'm going to want to do is go on the IRS website and get an EIN number. I'm going to use the information from the LLC to get the EIN number. Once I have the LLC information and the EIN number, then I can go to the bank and open up a bank account. Now that I have the LLC, the EIN number, and the bank account, I can then potentially close on the property. And then more importantly, what happens now is I have to file that BOI report, right? So under current law, when you file an LLC, you have a certain amount of days before you have to file this report online for your LLC. And so those are kind of the steps in order to set up an LLC. We talked about the pros and cons of an LLC, and hopefully this podcast can be your blueprint, your roadmap to, do I need an LLC? How many LLCs do I need? And when is it worth setting up one? And I hope this was able to help you. And if you could do me a favor, and if you got a lot of enjoyment out of this podcast and you learned a lot, please spread the word. So I don't get any advertisement money. I don't make any money off this podcast. It's strictly educational and it's free. It's literally free stuff, but I need you to help me promote it. So if you could share this with your friends and family, maybe other investors, if you could drop it in my Facebook group, Tax Strategies for Real Estate Investors, just share it and promote it and get as much information out there to people, as much quality information out there. There's a lot of like bad actors, fake gurus online. I like to think what I push out there is legit, it's accurate, and you could take it to the bank and you can act upon the information and the education that I motivate and inspire you guys with. So thanks for tuning in to today's show, and we'll see you guys in the next episode.